Welcome to today's market report. European stock markets traded largely lower on Tuesday, followed the downbeat lead from the US and Asia, with large-cap tobacco companies hit hard by reports of new US regulation. DAX in Germany traded 0.1% higher, CAC 40 fell 0.6%, FTSE 100 dropped 0.2%, while the blue-chip Euro Stoxx 50 fell 0.3%. British America tobacco stock fell 5.6% and Imperial Brands stock fell 5.4% on reports that the US administration wants tobacco companies to cut the level of nicotine in cigarettes to non-addictive levels, something that would undermine the group's long-term sales prospects. Atos stock dropped 5.1% after the French IT consulting company announced it had acquired 3 more companies while reporting a drop in its first quarter revenue. Associated British Foods stock fell 2.2% after the UK-based retailer reported a halving in first half profit, and the COVID-19 lockdown continued to weigh on revenues at its Primark fashion stores. Petrofac stock fell 1.9% as the provider of services to the oil industry reported a loss for 2020, while Danone stock fell 1.9% after posting a 3.3% fall in first quarter sales, as lockdowns continued to dent its bottled water and baby food sales. This was some positive news as the UK jobless rate fell to 4.9% in the quarter through February from 5.1%, but this has to be tempered with the realization that company payrolls fell for the first time in 4 months as more people pulled out of the workforce. German producer prices for March also surprised to the upside, climbing 0.9% on the month, a gain of 3.7% on the year. Early on Tuesday, the People's Bank of China kept its loan prime rate steady at 3.85% earlier in the day, as widely expected. Over the US, a streaming giant Netflix is set to kick off the key FAANG results after the close Tuesday, while there will also be numbers from the likes of drugmaker Johnson & Johnson and consumer goods manufacturer Procter Gamble. Oil prices strengthened on Tuesday, aided by continued optimism that the reopening of economies will stoke consumptions and also boosted by a weaker US dollar. US crude futures traded 1.2% higher at $64.20 per barrel, while the Brent contract rose 1.2% to $67.87 per barrel after gaining 4.6% on Wednesday. Both contracts are up more than 30% in 2021. Elsewhere, gold futures traded 0.1% higher at $1,772.15 per ounce. On the FX front, the GBPUSD pair retreated from daily swing highs and was lost hovering in the neutral territory around 139.85 to 139.90 region. The pair added to the previous day's massive rally of over 180 pips and edged higher during the first half of the trading action on Tuesday. The uptick pushed the pair to the highest level since early March and was supported by the prevalent bearish sentiment surrounding the US dollar. Bulls, however, struggled to capitalize on the move or find acceptance above the key 140 psychological mark. The US dollar dropped to 6-week lows amid speculations that the Fed will keep interest rates near zero levels for a longer period. This, along with mostly upbeat UK monthly employment details, provided an additional boost to the GBPUSD pair and remained supportive. That said, a combination of factors extended some support to the US dollar and capped any further gains for the GBPUSD pair, at least for now. A goodish pickup in the US Treasury bond yields helped ease the US dollar bearish pressure. This, along with a turnaround in the US equity futures, further underpinned the greenback's relative safe haven status against its British counterpart. The downside, however, remains cushioned amid optimism over the successful coronavirus vaccination campaign in the UK and the gradual reopening of the economy. This makes it prudent to wait for some strong follow-through selling before confirming that the recent strong move up from the 100-day SMA support has run out of steam. Hence, any meaningful pullback might still be seen as an opportunity to initiate fresh bullish positions around the GBPUSD pair. Euro-dollar retained a bullish stance above 120.15 after reaching a fresh one-month high at 120.79, while the dollar index was at 90.925. This is today's market news. Thanks for listening. We'll see you next time.